almost every single time Bitcoin's had a strong February, we've seen massive gains and increases later that year. So the big question is 2025 any different, or are we going to see something similar? We're going to look at Bitcoin's historic February pumps. We're going to look at what happened after those rallies and the impact of them. We're going to look to see if Bitcoin could explode in 2025 based on this trend. So we're going to look at what to look for, what to look out for this year, and I'm even going to give you some price predictions along the way. So with that, please, if you're not a subscriber, like, subscribe, share, do all those things. This is going to be my most impactful video yet. So I really hope that you stay to the end to hear what my price prediction is for February and moving forward. With that, let's get into it. So we're going to look at historic returns right now. Now remember, I have to say these things. This is not financial advice. I am not your financial advisor. So please do your own research. This is just my analysis, my data, my theories in my crazy head. So, remember, historical returns are not indicative of future results. So let's get, historical results are not indicative of future returns. But either way, let's take a look at this. February returns. You see there's only been 4 negative Februaries. That's the first thing you notice when you look at this chart. February is typically, historically, a very positive month. And look at this. Last year, 43%. 2023, 0.02, 12, 36, 23, 11, 3, 23, 14. So all relatively, nothing face melting, although a 71% return in 2011, that's almost face melting. But, 43%, 36%, those are incredible single month gains. You're talking about 1/12 of the year. That's pretty crazy. Now, look, average February return for Bitcoin from 2011 to 2024 is approximately 17%. So looking at that data, if you're just taking historical data and saying this is the result based on historical data, that would push Bitcoin to around $120,000 by the end of the month. And that would be significant because that means we're going to bust through. That would make us bust through our all-time high of around 110. And again, this is just a projection based on historical data. Has no relevance. This historical data doesn't understand what's currently going on in our market. But we are going to talk about that. So look at this. I also look at, well, if we did well in February, how do we end up for the year? Going back to 2011. So if you go back, look, there's 1, 2, 3, 4 red years, four red Februaries, right? And what happened in those months for the year? So 1, 2 of those times they ended up negative for the year. But if you look at this, all the rest are green. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 greens. And out of those 10 green years, only 1 year, 2022, only 1 year did a green February turn into a red year. Only one time in history. So right now I can tell you that the odds, but again, not indicative of future results. The odds tell me that if we have a positive February, it could bode very well for a positive year for Bitcoin. And look at these end of year prices. Look at them just go up and up. Yeah, 2018 pulled back significantly, 73%, but then it jumped up 95% the next year. And so historically speaking, 17% annual returns in February for Bitcoin. And then look, what happened in 2011, 71% increase in February. Bitcoin surged over 2,000% in 2011 total. So big February, big overall year. 2013, 63% return for February. Bitcoin hit its first $1,000 price later that year. Big February, big year for Bitcoin, right? What do we go back? 2013. Let's look here. 2013 says a 5,507% annual return. That's face melting insanity. Don't think we're going to get that. 2017, 23% return in February. And that was the legendary bull run. 2017 and 21 had crazy bull runs based on their crazy Februaries and all the things that were going on in those markets. Obviously, a lot different than today, but we like to look at history to see what's possible in the near future. So 2021, Bitcoin smashed 64,000 by April. That was a crazy year. 24, Bitcoin had a 117% run up. Don't forget, we're in a bull market, and regardless of what may feel, based on a couple sideways days or months or whatnot, we had a 43% return last February and had a 117% overall return, run up all the way to 93,000 and change by the end of the year. And look, we're already 102, 103,000, as high as 110 this year. It's been a pretty good run already, and I still think there's more room on this run. So the big question is, could history repeat itself in 2025? That's really why you're here and why we're here, is to figure out that question. Is it time to sell everything? Or do we look at this February as an indicator month? Because it's the shortest month of the year. And historically speaking, regulation changes might happen after a new presidency, which coincides with other things. But let's take a look. Let's talk about Bitcoin 2025 price projections. I'm looking at, we hit all-time highs, but could Bitcoin go to 150 to 200? We're going to talk about that. Here's the important things to look for this year. You have to watch these things. We're going to talk about each one of them individually, but institutional buying and ETF inflows, you can't deny the impact that's had on Bitcoin and the entire crypto markets. It has changed it. A lot of people have said that this year is more of an institutional buying year, bull market, versus a retail bull market. That's probably true, but maybe we haven't hit the retail stride just yet. Bitcoin halving effects playing out. Is this like all the other halving periods, or is this different? What are we going to look for? Rising global adoption and on-chain activity. Rising global adoption. Are people front-running the U.S. and buying crypto that we don't really know about yet, or are they have their finger on that button ready for Trump to say something and then they're going to push it? Or is a lot of things going on in our country to get ready for this that they're just not telling us about yet, so they can get a better price on the Bitcoin? Strength in altcoins and DeFi, it's another thing we're going to look at, and macro and regulatory environment. Very important, very, very important. Let's talk about institutional buying and ETF inflows. Look, I have some notes up here because I don't want to miss anything. I think this is super important, all of these things. But so this is important because you have big institutions. BlackRock, one of the biggest investing companies in the entire planet, like a $15 trillion market cap, just incredible funds under management. Fidelity, big players. So we need to continue to see consistent inflows rather than outflows. This past week, I think there was like $500 million in inflows. I could be wrong on that, but maybe it's $400 to $600 million of inflows, and they're still buying. What to watch: daily, weekly net inflows of Bitcoin ETFs. Now, if you have access to this data, it's on the internet. You can look at this and you can tell, are the big whales, the institutions, buying or selling? This is important. Large whale transactions, institutions accumulating. We've seen whales accumulate when others are selling. So the big money is buying your Bitcoin if you're selling it. What does that tell you? So we want to continue to see that large whale transactions. On-chain data showing fewer BTC sold on exchanges. This is just a fact. They're running out of Bitcoin on these exchanges. It's absolutely insane. And so they're coming for your Bitcoin. So they're sucking it away from the retail investors. You're going to see some volatility like we've seen, 10, 20% moves, maybe more. Here's a big red flag, is that if institutions stop accumulating or we see ETF outflows, you could have some stalled momentum. So really watch that inflows. This is an important number to watch, because if this is an institutional run here and not so much retail, you have to see what the institutions are doing. Bitcoin halving effects playing out. So look, last year's halving effect had a big impact on how many Bitcoin could be mined. We all know that. Half the amount of Bitcoin rewards are going out every single day. So, is the Bitcoin stock to flow model aligning with past cycles? Do we look like past cycles? Are you checking that out? Miners still holding Bitcoin instead of selling. That's a good sign. If they're mining it and holding it, that's going to be even less Bitcoin that gets put out on the market. But that just shows that even the miners believe that the price is going to increase, not decrease. Media hype. You can't get away from the media hype. When the media talks about Bitcoin, you see Google searches for Bitcoin go up. When you see Google searches for Bitcoin, when you see more Coinbase downloads, when you see more inquiries about how to buy Bitcoin, on through Google searches, when you see YouTube videos like this one right here go up and up and up because more people are watching them, that's a good sign. The retail FOMO is a real thing. Typically, retail investors buy high and they sell low, and they run it up the market. When the markets run up, they run into it. They might make a little bit of money, but then they get scared as it comes down and they sell. It accelerates the loss, and then the real players come in and DCA on their way down so they can run that market back up. So if the miners start selling heavily or the supply shock doesn't push prices higher, you could see momentum weakening, and that weakened momentum is going to hurt price and play right into this halving cycle that we have. But when does that halving cycle end? It varies. And that's why we're looking at these indicators right now. Rising global adoption and on-chain activity. This is very vital. Obviously we talked about institutions. Governments are big institutions. And so Bitcoin adoption must expand beyond speculation to real world usage. And I would say storing Bitcoin as a strategic reserve is a real world use that's going to compete for your dollars and Bitcoin, right? So if countries are buying Bitcoin, countries have more money than individuals for the most part. Some countries don't. Depends on the individual, but they certainly have more money than me. So when you see that, so what you want to watch out for is, are more countries adopting Bitcoin either as a legal tender, which would be crazy, like El Salvador, or are they just adopting Bitcoin as a store of value? Are they doing a strategic reserve? Are the the regulatory laws and rules around Bitcoin loosening or tightening? Increasing merchant adoption. Okay, look, if Tesla, Stripe, Shopify are integrating Bitcoin payments, and with the new Lightning network becoming faster and cheaper Bitcoin payments, it might be a real thing. And I'd rather hold Bitcoin right now than dollars. Look, I love our country. I love US dollars. But the US dollar is a depreciating asset. It goes down over time. Think about what your dollar buys you today versus what it bought you a year ago, 5 years ago, 10 years ago, 20 years ago. It's not the same. A McDonald's hamburger does not cost $1 anymore. It costs a couple of your dollars, but it costs less Bitcoin. Bitcoin appreciates, the dollars depreciate. If network usage stagnates, right? If signals of lack of adoption go down, if there's a lack of adoption, you're going to see that momentum push down and possibly affect the price of Bitcoin. Altcoins and DeFi, very important. You can't really have a true bull market in crypto. Bitcoin does lead the way, but the altcoins and DeFi are an important part because the decentralized finance is really what this is pretty much all about. So watch Ethereum ETF approvals. That's already true. That Ethereum ETF is already done, but there's more ETFs coming. Solana, is XRP going to get one? I've seen even Doge possibly getting an ETF. Solana, Avalanche, Sui, all the layer 2 scaling solutions growing. I'm a big fan of Sui, Solana, all these things. American cryptos are going to pave the way in 2025. Total value locked in DeFi, if it's increasing, in protocols like Aave or Uniswap, that's a good sign too. But if altcoins remain weak and if Ethereum lags way, way below in Bitcoin, we may see a Bitcoin-only bull run. That's instead of a full-on crypto explosion. And maybe because of this institutional adoption, maybe it's Bitcoin that's going to see the massive pump and the altcoins aren't going to really do as much. I've seen lots of theories about altcoins. There's so many of them that, you're going to see only bull runs in certain coins and you're not going to see a total market bull run for altcoins. And that's definitely a possibility, and it could certainly affect this bull run. But overall, you're seeing the total value of crypto increase significantly. So I think the red flag would be, is it just Bitcoin? Is this an institutional Bitcoin, Ethereum, XRP only run? Or are we going to see altcoins pump as well? Solana's had a pretty good run also, but it's good to take note of these things and figure out, this is another indicator. Is this going up or down, more momentum or less momentum? Now, here's the big one that's really stifled us, but we continued to grow over the last several years, is that macro and regulatory environment. So if economic conditions favor risk assets, Bitcoin and crypto can thrive. So what does that mean? So look, if you have, if rates go up, okay, if the Fed raises the rates, not saying they're going to do that, and it doesn't look like they are right now, but if Fed raises the rates and I can get a 5, 6, 7% return in my checking account or my savings account, why am I going to risk everything to make, a 10, 20% return when I have a guaranteed FDIC insured, in my bank of 5, 6, 7%, depending on what the market gives at that point. So the higher the interest rates out there, the lower the push to find a higher risk asset with a better return. Because remember, dollars depreciate, and people look for appreciating assets to fight inflation. And if you have inflationary areas where you have high interest rates to try to tamper down that inflation, you're going to have less desire to find more riskier assets to get a return on your money. But as those rates come down, there's going to be that flight to risk on assets to get a better return, because you don't want your dollars to go to zero. So here's what you really need to watch for is that the interest rate cuts from the Fed. Lower rates equal more liquidity in the market. We've talked about this over and over again. And I truly believe the second the price of energy comes down, when you get gas and oil to cost less, that, the price of everything else is going to come down, because gas and oil are involved in pretty much all service and manufacturing processes, delivery. Plastics. Think about it. Gas and oil is involved in just about everything that is done. Clear crypto regulations that don't stifle the markets, right? Stifle innovation. The SEC temporary chair, Mark Ueda, said that, for years the SEC has stifled innovation, and they don't want to do that. So we have a new potential SEC chair, David Sachs, I believe, very pro Bitcoin. You have a very pro Bitcoin and crypto presidential administration, right from Trump all the way down. And so you should see, with more clarity, regulatory clarity. How are you going to open a crypto business in the U.S. and run if you don't know the rules of the game? You're going to get stopped out because you're fearing the regulatory lashing of the SEC. Well, that's not a fear right now. It is a fear if you're doing things nefariously, and they should have regulation to protect the consumer from true nefarious activity by crypto companies and scams and things like that. But the other ones, this is an innovative technological project. This is an innovative technological product, and it shouldn't be stifled. It should be developed, and we should lead the way in developing it. And I think that's the direction we're heading. So if the Fed keeps rates high or regulations hurt crypto innovation, momentum could slow. So these are all the things that I really think about. There's a lot of things to think about when you're talking about crypto, right? There's a lot of things to think about. And, I sometimes it's too much. You're like, well, how is all this stuff going to play out? How is the regulatory, how is all these different factors that are involved in crypto? So I look at it this way, so the worst case, let's talk about the worst case scenario on price prediction. The worst case is we could get sideways action. We could get stalling. We could get, consumer sentiment that's negative on crypto. And you might see Bitcoin lag around that $100,000 mark and maybe drop back down to previous highs, last year's highs, or even they say that the price of crypto doesn't drop below the last the price at the last presidential election. And so that put us down to, what is that, like 70,000 and change, 60, 70,000 before it popped up when he got elected. Well, Trump, I'm talking about in the US. But I would say, worst case scenario, and this is not financial advice. Please don't do anything based on this. This is my opinion. I'm entitled to them. But if you do anything based on that, that's up to you, and I wouldn't. I would read my disclaimers and disclosures down below, but these are my thoughts, and I'm just sharing them with you, and I have to say this dumb stuff, but it's true. So if we get sideways action, I'm going to tell you Bitcoin is going to lag below 100,000, and it's a very possible. If we have a negative February, it might set the tone for the rest of the year, but then something bullish could happen and it could change. Just because it happened in the past doesn't mean it's going to happen in the future. Now, also, you look at the conservative case, right? If Bitcoin follows the 2021 trend, we could see Bitcoin above 100 to maybe 120,000, which would be not a bad gain for most assets out there. And it's more risk, I get it, but there's been quite a bit of a reward. Last year we saw 117% increase. Not too shabby. Now, let's talk about the thing that I'm most excited about, which is a bullish case, a very, very bullish case. If Bitcoin repeats a 2017 trend, we could see Bitcoin over 150,000 to 200 plus thousand. Yeah, I know I'm not getting super specific, but we have a lot of things going on right now. We've got tariffs, we've got, which I think are going to be positive for the price of Bitcoin and crypto, believe it or not. We've got still haven't gotten all the clarity on what is meant. If they come out and say we're not doing a Bitcoin strategic reserve, that could seriously impact pricing. But I'm going to take the stance that if you have a president that has a very big stake in a very large company and they're buying high amounts of crypto right now, who's even put out a meme coin and has personal stake in crypto and his family does, I just don't see how we're not going to have a bullish year. And I'm going to go to that. My price prediction, this is a guess. And I think if things go the way they're going, we could be, there's a consolidation phase we're in right now. We could be coiling up for a pretty big February. I'm predicting 120 in February, possibly, based on past performance. And then I'm looking at 150 to 200K for the end of the year. Now, a lot of things could change. Right now, we sit in a very specific seat. In a month, 2 months, 3 months, it could look very, very different. There's a lot of things that could happen on the planet. Too many variables to even mention in this 20-minute video here to talk about. But I believe I gave you enough fodder to think about those 5 pieces and how they're going to affect in the near future and what to look for and what to look out for. I hope you've gotten some value in this little video here. And if you did and you're still here, please let me know what you think of the price of Bitcoin, where it's going to go, what's crypto going to do, is this going to be a bull run, and what do we have to look forward in 2025? Thanks again, and I'll see you next time.